Okay, so today we have to learn about importance of regulation in banking industry. Okay, let me check.
The regulatory framework for banks is
We covered this particular topic yesterday. Okay, in this module we have learned. So in this module, so far we have learned about types of bank, modern India bank. Okay, banking products and services, regulatory framework, and role of central bank. Now, and we will learn about importance of
regulations play a crucial role in ensuring stability and fostering trust within the banking system.
Okay, so what is the why it is important, Ebenezer? Why it is important to have a regulatory body in the system? Why it is important? Why it is important to have a regulatory body in the system, the banking system? Why it is important? Like regulatory body is RBI only, no? For banking sector, who is regulatory body? RBI. But what is the importance of having a regulatory body in the system? Why it is important?
It's the main purpose, sir.
Think about before RBI, what all challenges banking industry used to face. I explained this thing many times. Like before RBI was established in 1935. Okay, under RBI Act 1934.
34, sir.
RBI was established in 1935.
In 1934, the monopoly was did. It started in HDFC Bank in 1994.
Listen, RBI was established in 1935 under the Act of RBI Act 1934. RBI was not established in 1934. Only the Act was passed. RBI Act was passed in 1934. And then after passing of that Act in 1935, RBI was established. Okay?
Yes, sir.
That's what I am asking. What all challenges banking sector used to face before establishment of RBI?
Needs to customer queries. What are the challenges they are facing?
What problems they used to face? Banks. So whatever we are learning, keep writing down the headlines. Okay, like this importance of regulation in banking system. Keep noting down the headlines and just do revise at your home. So many sources. You can just search on YouTube. Just do a R&D on the topics. No, you are going to work in banking sector. Okay, there will be customers whom you have to explain all the products and everything. If you don't know the things, how you are going to explain? Nizar, please try to understand what. Yes, am I audible to you?
Yes, sir. Audible, sir.
Are you able to understand what I am trying to explain?
Yes, sir. Explain, sir.
I am saying start studying at home. Start self-study. Okay? Because whatever
Yes,
I am teaching, if you are not able to remember those things, you will not be able to speak in interview when they will ask these questions. Okay? I do not want to see this thing again, because if you are not able to explain what is the importance of regulatory body in the banking system, what are the different roles of RBI. So importance of regulation in banking system, importance of regulation. So why it is important to have regulation, not only in banking system, everywhere. What happens when your father is not at home? You feel little bit free. You fight with your siblings. You fight with your sister. You fight with your brother also. Your brother must be bothering you in the absence of father. And when your father comes at home in the evening from job or business, okay, and he becomes like very sincere boy. He used to, like, generally it happens in every family. Why? Because he is the regulatory body in your family. So when there is a regulatory body, everybody works properly. Nobody do any mistake. Nobody do any mischief. Okay, nobody bother anyone. Nobody shouts. Nobody go outside without permission. So it is important. Suppose there is a family where regulatory body are outside for some work and only kids are at home. What kind of scenario you can imagine? And there are, like, suppose 4 or 5 siblings at home. I am buying anything, purchasing anything, doing shopping, everything. I need to take permission. Okay, that I cannot do. So, and I also feel very good, okay, that they have constructed this set of rules so that we are living with some boundaries. Okay, and I have also created some boundaries in my family. My kids also know this thing, that our father do not like this, and we do not have to do cross these limits. Okay, because if we do such thing, we are going to be punished, we are going to get punished. Okay, this is the importance of regulation body. Okay, to work ethically with high ethical standards, to work to implement fair practice. Okay, to protect consumer rights, to maintain trust in the customer. Okay, there should be fair rules and regulation. There should be a transparency in the system. All these things happen, then only customer will have a trust on you, right? Then only they will put their money in the banking system. Suppose if every month banks are going get bankrupt, will the investor invest their money in banks? No, they will not. They will keep their money. They will say, like, we are happy to keep our money at home. What is the purpose of, like, putting our 1 crore rupees in banks when they are saying that we will give only 5 lakh rupees of insurance only, and every month we are hearing that banks are becoming bankrupt? Okay, what is the purpose of losing 95 lakh rupees just like that? We will keep it here. We are happy that it is not growing, but at least the capital is intact. Capital is not going anywhere. We will buy some property or something. Okay, but we will not invest in bank because it is risky. So regulatory body makes sure that such kind of things, such kind of thoughts should never come in investor or customer's mind. They should feel secure. Okay, they should be able to have confidence on banking system that their privacy will be intact, their information will not be shared with anyone. Okay, if you anyhow you come to know that somebody in the bank, any bank employee, okay, they have shared your banking information, okay, bank's information with some guys or some companies, and these companies are giving promotional calls to you. How do you feel? Like, it is very risky to keep account in this bank. Today they have shared this information to some marketing companies, okay, for the purpose of marketing. Tomorrow they may share this information to some wrong people also, from which I can get some monetary losses also. Okay, so it is better to just close the account from this bank. Okay, so maintaining confidence is very much important, making trust. Otherwise, there are so many banks available in the market, right? Okay, we can open our bank account in any of the bank, right? Risk mitigation. They try to just mitigate. Mitigate means reducing something. Reduce the risk, control everything. Consumer protection. It is very much important to protect the rights of consumer. Okay, consumer have complete right to get right information and complete information. If somebody, any banker or any bank employee, they are not giving you right information or complete information, you can directly go and complain in the grievance cell, right? And now just exchange, swap your sides. Now just stand up from consumer's chair and now sit as on the banker's chair. Okay, now sides are swapped, interchanged. Now you have become banker. Okay, you have to take care of all the consumer rights. Now you know what a consumer, what a customer expects from bank. Okay, what kind of service they expect from bank. You have to provide that, only that much service. Okay, suppose Amrita, you are going to bank. What kind of treatment you want? Suppose you have to deposit money in the bank, and you want to inquire about FD also. There are two purposes. Whenever customer is coming in the bank, everyone wants such kind of things, such kind of treatments in the bank. Okay, that the staff should talk nicely, they behave appropriately. Okay, they should not shout at us, they should greet us. Okay, when we go to bank, they should say good morning ma'am, good morning Ebenezer sir. Okay, definitely you will feel good, right? And when you will become banker, okay, whoever you are meeting with, what kind of customer you are meeting with, if you behave in such manner, customer will always appreciate this behavior. Okay, they will always appreciate your services, and they will always come to you only. Okay, that if I want to open an account, if I want to open a fixed deposit, I will go to Amrita only, because she is the one who talks nicely. Otherwise, all the people are very rude or such kind of people. Okay, you have to demonstrate such kind of behavior. Okay, whatever information you are giving, just give the right and complete information. Fair practice should be done. It should not be like somebody is coming to you asking for loan, and you are saying, I will take 5,000 rupees and I will get your loan approved. I have some good terms with manager. I will recommend your file. Okay, and he will approve, but I will take 5,000 rupees commission. Okay, such kind of unethical practice should not be done. Okay, nowadays it is almost eliminated, but still we don't know what is happening in the bank. Okay, whoever is doing what. Okay, still very frequently we see such kind of news that people are involved in unethical practices. Recently we have seen the case of PMC Bank. Okay, regulatory bodies, okay, make sure that there should be a financial stability, there should be a consumer protection, there should be a risk mitigation, there should be a confidence and trust on the banking system. Okay, it makes sure, okay, they make such kind of system so that nobody can cheat or give bad services to the customer, because they keep on spreading awareness. Regulatory body keep on spreading awareness that if you face any challenge in the bank, you can go directly to the grievance cell, and if grievance cell does not give you solution, you can directly come to banking ombudsman, which has been appointed by especially RBI to listen the complaints of customer. So they have, a regulatory body has made a system that if any of the employee do not work appropriately or do not fulfill their duties, okay, RBI is there to punish them. Okay, and they keep spreading awareness, they keep educating customers about all these things. Banking ombudsman, you might have seen many times like advertisement of banking ombudsman on your television.
Unit 5. Economies of money and banking. At the end of this unit, you will be able to understand the structure and components of the Indian banking system. Explore the regulatory framework governing banks in India.
Okay, so in this particular module, we are going to learn about various functions performed by bank, okay, and the significance of banks in the financial system.
Money is any item that everyone accepts as a medium of exchange. It is widely recognized as a means for purchasing goods and services and repayments of debts. it allows people to receive anything that they need for a livelihood. In ancient times, people used to obtain things through the barter system. Here, two individuals or parties would exchange goods and services that the other needs. But the earlier method of bartering did not have the ease of transferability that eventually led to the intervention of money.
Okay. So
At
before
the end of this unit,
so now tell me, both of you, what do you understand by money? What is money? Yes. Ebenezer and Amrita, tell me, what is money?
We can whatever
Sorry?
we want. We can want to buy the products, purchase anything the needs of cost.
Okay, we can purchase products with money. That's what you are saying?
Yes, sir.
And Amrita?
Whatever
good.
shops will go to groceries, etc. More and more.
Very good.
We can say want to buy the products needs, sir. We need money also.
We need money. Yes, Amrita?
Sir, money acts as a medium to exchange goods and services, sir. To purchase or to pay or to borrow or to buy anything, money acts as a medium, sir.
Very good. So, money is a medium of exchange. Okay? It is a common medium of exchange. We can buy or sell anything by exchanging money against that particular product. If we want to purchase a mobile, okay, purchasing it what? We are exchanging it with money, okay. We are just exchanging money with the mobile. If we are buying vegetables, we are exchanging vegetables with the money, okay. And suppose if there is no money in the market, no 10 rupees note, no 100 rupees note, no 500 rupees note, there is no money. How people are going to exchange things? How people are going to buy things? That we are exchanging goods and services with money, right? We are buying different products, okay, with money, okay. We pay the cost of that particular thing and we pay that much amount of money, okay, and we get the product, okay. But suppose if somehow money become vanish from the system, okay, if there is no money in the market, how people are going to purchase things? How people are going to purchase grocery item, purchase all the basic daily needs? How they are going to buy motorcycle? How they are going to buy car if there is no money? And nowadays everybody is running behind money. Everybody wants to earn more and more money, okay. And when they are tired with earning, they start storing more and more money, and they keep storing. And someday what happens? Income tax department came to know about that storage, and they go and just put the rate and they seize that whole property. But my point is, if all the money vanish from the system, all the currency, how we are going to purchase and sell goods? Yes, Amrita. Have you ever thought this thing?
It will be give and take policy, sir. I will give you this, you will give me that.
Okay, fine. How you are going to buy apples from the market? What you are going to give? Suppose there is a hairdresser. Okay, suppose there is a hairdresser. he want to purchase vegetables. Okay, he will go to vegetable vendors and he will say, okay, give me vegetables, I will cut your hairs. Okay, they say okay, and they take the haircut. Tomorrow again he need vegetable and they say again, he goes there that give me vegetables, I will cut your hairs. They will say yesterday itself you cut our hairs, we don't have hairs on our head, so we don't want haircut or anything. How that person is going to exchange what? Because he can give only service of haircut, no? If he goes to vegetable owner, like I want vegetable, if you want, I can mend your shoes, I can polish your shoes. They will say no, I don't wear shoes, I wear slippers only, so I do not require any mending my slippers or shoes. How things are going to be executed, how system will run. Okay, there was a system, okay, through which, see, it is not like if we do not have money we cannot live. There are, we can see example, there are many things which are surviving without money. Animals, do they use money? No, they are still surviving. Okay, this nature, it is still surviving without money. This is only humans who feel that it is impossible to survive, although it has become integral part of our system, that if we want to exchange money, if we want to get anything, we have a common medium of exchange, that we can exchange it with the money. But in ancient times, okay, there was a system through which people used to exchange goods and services, and that system is called as barter system. Do you know this thing, barter system?
Don't know.
Have you ever? Okay, I
Not yet about it.
I will show you. So what they used to do, they used to exchange goods against goods. Okay, so like Amrita said that we will exchange, and I gave the example of barber, that there were some challenges with the system. The challenge I said, that every time you cannot exchange goods. Okay, you need to have a common medium through which you can purchase anything. Okay, so there were some limitations due to which that barter system get stopped, and a currency was invented. Okay, currency was invented, and then it became very easy, okay, to exchange goods and services in the market. Okay, we will see this thing with the help of one video. Okay, see what they are saying. Money is any item that everyone accept as a medium of exchange. It is just a medium of exchange through which you can buy anything, you can get anything. It is widely recognized, it is widely accepted, everyone accepts this. Okay, it allows people to receive anything that is needed for a livelihood. You can purchase anything which is required for your survival. There was a time when somebody had invented money for the very first time. Okay, but if you think before that time, how people used to exchange goods and services in ancient time, people used to obtain things through barter system. Okay, here two individual parties would exchange goods services that the other need. Okay, but the earlier method of bartering did not have ease of transferability. It is not easy to exchange everything every time. Okay, eventually led to a intervention of money, which ultimately raise a requirement of money, and money get invented. We say no, need is the mother of invention. Okay, when it is required, when they thought that it is not easy to survive, okay, it becomes very difficult to exchange goods every time. Okay, so they thought we need a common medium. So they invented coins, bronze coins, okay, and silver coins, and gold coins, iron coins, okay, different metal coins were invented, through which people used to buy and sell goods. Okay, right? And slowly and gradually it gets improved. Nowadays we are having different kind of money, like money, paper money, we have metal money, coins, we have plastic money also, we have cryptocurrency also, electronic money. Do you know cryptocurrency, Bitcoin or anything? Have you ever heard about Bitcoin? Yes, Ebenezer, say yes or no. If you have not heard, quickly say no, sir. If you have heard, this is a very interesting thing, Bitcoin. Have you ever heard about Bitcoin? For God's sake, say yes or no.
Yes.
Why you become very hesitant saying yes or no? There is no harm to say no. If we are saying no, it means we are going to learn a very new thing today. Okay, and when you are saying no or yes, anything, just please make sure you are on unmute. You unmute yourself. If you keep yourself on mute and you are saying yes, no, I will not be able to hear anything. Have you ever seen any symbol like this? Bitcoin. Such kind of symbols in the market or in social media or anywhere?
No, sir.
No? Okay, fine. So basically, it is a cryptocurrency. I will tell you about this. Just give me 1 minute. Okay, this is basically a cryptocurrency. So different type of currencies have been invented. Do you know that one cryptocurrency, how much it cost? That one currency, one coin cost, value of one coin is before I tell you the cost of one Bitcoin, just tell me the cost of $1. Tell me the cost of $1. How much $1 cost in rupees? $1 is how much rupees? Amrita?
58 something, I think. Yes.
58? You are living 10 years back. Okay, even 15 years back. You are living in 2005 or 6. Yes, Ebenezer. How
Sir,
much $1 cost?
84, sir.
It is around 84 rupees. $1 cost 84 rupees. Now, let me tell you, one Bitcoin cost at least 56 lakh rupees. One Bitcoin cost is, let's check on internet what is today's rate of Bitcoin rate. Okay, today's one Bitcoin is 50 lakh rupees. Okay, 24 hours ago it was 51 lakh rupees. It has come down. Okay, it is 50 lakh rupees. This is the current rate of one Bitcoin, one BTC, short form, 50 lakh rupees. Okay, this is not a small currency. It's very, such kind of currencies have been invented. And so don't you see news and all? Keep watching news. Okay, every day you should watch news. You should stay updated what is happening around the globe. Okay, Ebenezer? So,
Sir,
Okay, sir.
always watch news every day. Okay, just stay updated with all such kind of news. Okay, such kind of currencies are also, and it is very popular currency, and people are expecting that in next 6 months the cost of one Bitcoin will go around 1.25 crore rupees. The cost of one Bitcoin will become 1.25 crore rupees, one Bitcoin. Right? That kind of potential this has. Okay, so let's watch the video.
Evolution of money, from barter to digital money. Have you ever wondered how money came into existence? Centuries ago, there was no money. So how did people buy and sell?
Just watch this video very carefully, because they have explained when there was no money how people used to buy or sell goods and services. Okay, just watch this, and what challenges they used to face.
Evolution of money, from barter to digital money. Have you ever wondered how money came into existence? Centuries ago, there was no money. So how did people buy and sell? It all started with the barter system. Imagine a prosperous kingdom. In this kingdom, there were people doing different types of work, like weavers, cobblers, farmers, tailors, etc. This is Kisna, a farmer. This is Manoj, a cobbler. When Manoj needs vegetables, he goes to Kisna and exchanges a pair of slippers for the vegetables he needs. Both are happy. This is known as barter system. The system by which one person could exchange goods and services produced by him with goods and services produced by another. This is called a barter system. Barter system works on double coincidence principle. Two coincidences have to happen. One is that you should find someone who's willing to sell what you want, and second is that the seller wants something that you're willing to sell. But does barter system always work? The direct exchange of one commodity for another requires direct satisfaction of both parties. Now, Manoj needs more vegetables and goes to Kisna, but Kisna doesn't need more footwear. Hence, no barter takes place. Now Manoj needs a haircut and goes to Shambhu the barber. But the value of the haircut is much lesser than the value of a pair of slippers. And the slipper cannot be divided, and hence, no barter takes place. Manoj needs milk, but the quantity of milk to be received in exchange for a pair of slippers is very high. And with milk being perishable, Manoj doesn't want to take too much of it. Hence, barter does not take place. Thus, the exchange of goods was not easy. Imagine the confusion. That's why the barter system gradually ended. But what was the alternative? Around the same time, metals were discovered and took over the ancient world. In the 6th century BC, the first coins resembling the current ones appeared. They were small metal pieces with fixed weight and value, and bearing an official seal, which is the mark of the government who has minted them, and also a guarantee of their value. The first metals used were gold and silver. In the Mauryan period, gold, silver, and copper coins were being used. King Sher Shah Suri issued a silver coin which was termed as rupiah. The Hindi word rupiah is derived from the Sanskrit word rupya, which means a coin of silver. The silver coin remained in use during the Mughal period, the Maratha era, as well as in British India. After independence of India in 1947 and the accession of the princely states to the new union, the Indian rupee replaced all the currencies of previously autonomous states. After its formation, the Reserve Bank of India issued notes and coins on behalf of the Government of India. India has progressed a lot and now has many digital payment options like credit cards, wallets, online transfer facility, thus moving from a cash to a cashless society.
Okay, so have you understood? So what you have understood with this video?
Yes, sir.
What you have understood, Amrita?
Sir, in this barter system, both of the people, those who want things and those who sell the things, should be satisfied, sir.
Yes,
Uh,
it is a two
he should sell what
coincidence.
he wants.
Yes, two
As well as
coincidence
he
has
should
to
agree
happen
what
at
he
same
gives.
time. Yes. So if someone is selling anything, the person who is buying, they must have the product which other person is looking for. Okay, and it is not possible every time. So just because of such kind of challenges, that transferability was not easy. Okay, so the requirement of money was raised. Okay, and they developed metal coins. Okay, the currency through which they can do the transaction. They can exchange goods and services.
The concept of money in economics is considered as a crucial element for the proper functioning of an economy. It has become an essential means of exchange in the entire world. It has value to obtain things that they wish to avail. There are specific properties of money that account for its worldwide usage.
These are the three properties of money: interchangeability, repeated use, and transferable. So you can interchange it with any other thing. Okay, you can exchange it. Repeated usage, you can use it repeatedly, right? You can use your currency, paper note or like coin repeatedly. Yes or no? Am I audible?
Yes.
Yeah. Transferable, you can carry this money anywhere because it is light in weight. You can carry it anywhere. Okay. So this is the property of money.
Components that drive the economy. Money allows people to make transactions, whereas banks play a vital role in circulating the money supply in the market.
There are four types of money. Let's understand one by one. It is not going to be asked in interview, but for the knowledge, we are just awareing you that such kind of things, such kind of terminologies are being used in terms of money.
It consists of the type
Fiat
of
money.
currency that is legally issued by the government. In simpler terms, it does not involve physical commodities like gold and silver. Examples of fiat money include the US dollar, the euro, and the pound.
So fiat money is the money which has been issued by legal currency of any country. Okay, which has been issued by government. जैसे US dollar, Indian rupees, euro, pound, Japanese yen, Australian dollar, Swiss franc. Okay, Singapore dollar. Okay, such kind of different currencies are there.
It is the type of currency that is generated by commercial banks. Commercial banks are responsible for making money by providing loans. It can be in any form like personal loan, mortgages, etc. In simpler terms, the amount of money that is produced by the commercial bank is called commercial money.
Just a second, let me just connect my. Okay, so commercial money, it is a type of money which is generated by commercial bank, like money which has been earned from any commercial activity. So what bank does? Bank collect money and they lend this money to different people. They give loan to different people. Okay, the money which they earn, okay, interest which they earn, that is called as commercial money. Okay, which has been earned from any commercial activity.
Fiduciary cash, currency or money, alludes to banknotes and coins available for use in the economy. This is the liquidity accessible to financial actors to do exchanges. It is a method for payment. Cash is a substantial or tangible property, not at all like scriptural cash which is insignificant. Fiduciary cash, currency or money.
Okay, fiduciary cash or money alludes to banknotes. The banknotes, coins available to use in the economy. The material money which is available in your hand, it is called as fiduciary money. Okay, whichever, and it is also similar to the fiat money. The money is same which you using. Okay, it is a different perspective. Okay, through which we have done the nomenclature. Money which is approved by government, it is called fiduciary money. Commercial money, money which has been earned from commercial activity by the bank, is called commercial money. Fiduciary money, the material money which is in the material form to be used in the market, is called this fiduciary money.
Commodity money is money whose value comes from a commodity of which it is made.
Okay, commodity money is the money whose value comes from a commodity of which it is made. Okay, right? So, like there is a gold. What is the price of gold? Price of 1 gram, 10 gram of gold is. Do you know what is the price of 10 gram of gold? Current price? It is around 70,000. Okay, let me just quickly check the current price. 77,000. Oh my God, it has reached very high. Okay, 77,000. Okay, that particular value of gold, that money, 77,000, is called commodity money because it has been derived from that particular commodity. Like if we talk about, there is a cost of oil, crude oil. Okay, that particular cost, that value is called commodity money because it may vary from different commodities. Different commodities have different values. The value of money which derived from a particular commodity. Silver has some different value. Okay, so this is what commodity money. So that's all about our first 5 modules. So we have covered our 5 modules here. In the first module, we have covered understanding of bank module, structure, what is bank, importance of understanding bank, banking features, primary function of bank, functions of bank, types of lending Indian bank, types of borrowing in Indian bank, exchanging money, types of financial remittances, diversified services of Indian bank, exchanging money, role of bank in economy, banking and economic growth, direct impact of bank in economy, significance of well-functioning bank, role of bank in maintaining economic stability, modern bank, type of bank, banking service and products, regulatory framework, importance of regulatory framework, money and banking, properties of money and types of money. Okay.